Welcome to The Market That Moves America, a podcast from the National Center for the Middle Market. The center is the leading source of knowledge, leadership, and innovative research on the middle market economy. Throughout our podcast, we will feature middle market leaders and stakeholders to hear their real-world perspectives on trends and emerging issues.
Welcome to The Market That Moves America. My name is Kim Barnhart from the National Center for the Middle Market at The Ohio State University, Fisher College of Business. Today, we're spotlighting the lower or emerging middle market, firms that are scaling quickly, professionalizing systems, and making pivotal decisions about technology, operations, and risk. Joining me are two leaders from NCMM sponsor organizations that work closely with this segment, Edward Galvin of Visa and Rob Poliseno of Chubb. We'll talk about what they're seeing on the front lines, access to working capital, digitization, supply chain and risk management, and how companies can translate today's uncertainty into tomorrow's growth. Edward, Rob, thanks for being here.
Thanks for having us.
Thank you.
Rob, let's start with you. Could you share a little bit about your background and expertise, particularly on the middle market?
Sure. Again, thanks for having me. I'm currently division president of our North America small and lower middle market division for Chubb. And in this relatively newly defined segment, which we rolled out spring of last year, I am responsible for the strategic alignment of this segment. It really combines small business, lower middle market, and our core middle market under one tower. And we believe that this structure better serves our customers in this segment. I'm based in Philadelphia. I have close to 30 years of experience in the insurance industry and currently responsible for pricing, products, portfolio management, underwriting, pretty much the whole kit and caboodle of this segment. So glad to be here with you.
What a veteran to the industry. Thanks for being here. Edward, would love to hear a little bit about your expertise and background.
Thank you, Kim, and thank you to the National Center for the Middle Market for doing a phenomenal job in amplifying the emerging middle market that we're going to talk about today. So thank you for having me on. Yes, Edward Galvin. I live in Chicago. I've been with Visa for 15 years. I lead our North America Visa Commercial Solutions organization. So effectively, that's business lines that serve payment products to large market corporations, middle market corporations, and small business corporations, right? So the full spectrum. And this is a very exciting segment for us from a growth point of view. So happy to talk to you and Rob today on topic.
Both incredible leaders and experts in your respective fields, and very excited to dive in here. But let's take a step back and work better understand the definition of the lower or emerging middle market. We all have different viewpoints, particularly on revenue. But from NCMM's perspective, it's less about that revenue definition, which we use a $10 to $50 million range. And it's more about the characteristics, the challenges, opportunities, and shared issues that these companies face. And, it's also important to note that this is the largest segment of the middle market, accounting for roughly 80% of all the businesses in that $10 million to $1 billion range that NCMM uses to define the middle market. So I'm going to have both of you answer this, but we're going to go ahead and start with Edward on how Visa defines the emerging middle market, both in revenue size, but then also in characteristics.
Yeah, thank you. So I think your classification was, 10 million to $1 billion. But I would look at the emerging middle market just from a revenue size of 10 to maybe 50, that segment, if you will. But it varies, right? And a lot of the partners we work with define it very, very differently. Net, it's a massive segment, right? And we look at it, there's about 160,000 companies in this, what we classify the EMM segment, that are driving trillions in revenue today, somewhere in the region of 2 to 3 trillion in revenue. So it's phenomenally large. Like as a group, they compare it to top 10 GDP countries like Brazil, Italy, or Canada. So in essence, they're the backbone of what's keeping America moving today. So a very important segment. We look at it We look at companies that are in the lower middle market, moving into core middle, and then there's emerging middle as well. So there's some of the I guess some of the ways we would look at it. There's high revenue growth, right? Typically they're 9 to 11% revenue growth year over year. So they have a large employment growth as well, 8 to 10, which are in some respects higher than what we see across other industry segments or sectors as well. So that's an initial perspective, Kim.
Thank you so much. Rob?
Yeah, so some similarities and some differences from what Ed just described, but at Chubb, we define the middle market as companies generating between 30 million and $1 billion in annual revenue. So kind of close. And within that range, we define the lower middle market or the emerging middle market as 30 million to 75 million. So it's the lower end tranche of the overall middle market segment. And it is the small and lower middle market segment for Chubb is a extremely attractive segment, simply because it's a vital engine of economic growth, job creation, and local business development for the business community. An incredibly resilient sector of the economy. We're going to talk about that a little bit. And these companies are nimble. They adapt quickly. They adapt to changing risk environments. They drive innovation, and they respond quicker to customer needs in their local markets. So providing growth opportunities as well as expansion. So historically, their strong performance, their resiliency underscores kind of their essential role they play in the economy, and hence it being a very attractive segment for Chubb to participate in and to serve. Ed touched on this a little bit, but from an economic growth perspective, like revenue growth generally outpaces the S&P 500. In 2025 alone, 53% of lower middle market companies saw past year revenues growth exceed 10%. So that's a pretty interesting statistic and one that we are encouraged by. And finally, from an innovation perspective, lower middle market firms are frequently sources of new products, right? So it's part of their DNA and very attractive to private equity as well. Oh, and one more point.
Go ahead.
Yeah. Just one more point, Ed. Lower middle market companies are typically community based. They serve the neighborhoods that they're in. So, supporting regional economies and community development is critical, and it's very much part of what Chubb supports as well. So, just one other fine point before I included that part of it. And sorry, I was cutting you off.
Yeah, it's a great point, and it's kind of going to what I wanted to weigh in on, and that is, like, we're looking at what the size is, but we've seen different partners. Firstly, there's the middle market, right? And we've seen our partners that we work with define what that looks like, and then taking a really hard look at, well, what is the emerging middle market versus core versus the top end of the middle market, and that is different for different constituents dependent on where they operate, size of their existing business, and the kind of their industries they're in today. So there can be variations across the scale on size, but I think metrics and characteristics are pretty common across all this segment.
Absolutely. And we kind of already segued into that next question about, why does this segment matter to the community? And I think you guys largely answered that, but from the NCMM perspective, we understand through nearly 15 years of research that the middle market is the backbone of the economy. It's a third of US sector GDP and employment. They are high growers, as you said. They're innovative. They're constantly exploring new products and services, and that is such a key attractor, I would imagine, for companies looking to partner with the segment. But Rob, I'll have you start with this one. Any other perspectives from Chubb's perspective on why this segment is so critical to you or to your industry?
Well, I guess it goes to kind of a risk mitigation point of view as well. Larger companies have a bigger balance sheet to potentially tolerate large losses and larger events. So our ability to serve the emerging and lower middle market from a risk management perspective and help educate the market on emerging risks, many of which we'll talk about around technology and supply chain, is critical. So our ability to serve that market, growing and massive in scale, is very attractive.
Absolutely. Edward, anything else you'd like to add?
Yeah, and look, I'm in the payments business, and I would say that this segment has really ignited a demand for the next generation of digital solutions in the B2B ecosystem. And like, there's consumer constituents, like we all are when we operate with our payment modes every day, but then there's the business side. And this segment in particular, they're so close to consumer, and they're so close to what you and I experience on a day-to-day basis when we go to transact at McDonald's or at Starbucks or whatever. That they're fueling, if you will, the segment like is fueling what the next generation of digital solutions is going to look like, and we're very excited about that.
You're already teasing out one of my questions on silver tsunami and generational transfer. So thanks for that tease there. But as before we get into the 2025 trends that we saw, something that NCMM says often is the emerging middle market has big company problems, but small company resources. They're oftentimes tough to reach. They have competing priorities and limited resources. And so from your perspective, what do you see as the largest challenges, and then subsequently the biggest opportunities for this segment? And I'll have Edward go ahead and start with that one.
Okay, so just to back up the opportunities.
Yeah.
All right. I guess so. Let's just look at the segment in itself first and foremost, right? And what's the shift that's happening in there, right? And I'm going to quote a Wall Street Journal. It basically said approximately 4 million people turned 65 in 2024, right? So there's a massive generational shift happening, okay? And this will continue through 2027, 2028, with baby boomers reaching 65 by 2030, right? So in essence, the demographic, the core demographic in this segment is going to fundamentally shift and change, right? So that's number one. Number two, I think one of the key findings from the prior study, which Visa sponsored, was there'll be 30% of companies are anticipating changing ownership in the next 24 months. Right. So when you and that's up 2x from the prior year, right? So just taking those two stats in particular, like there's a massive shift going on in this industry, and that's going to touch every part of how these companies, how they run, how they hire, how they finance, how the products and services they bring to market, how they leverage technology, how they pay for goods and services. And again, it kind of ties back to my prior point. These individuals that are owning, running, and managing these companies are going to be from they're millennial and Gen Z, right? So there's a whole. So they're much closer to, let's say, to what some of the consumer requirements may be today in that space, and they will expect that of the providers and the service providers that are working alongside, that are providing services to these companies and individuals. Okay, so I think that answers your question, but I just grounded in the massive, let's say, demographic shift that's happening around and in this segment real time today, that any provider or any service provider that's showing up and working with these companies needs to be very mindful of in whatever, let's say, industry they may be operating in.
That's a really great way to ground ourselves as we close out, as we define this segment. Rob, anything else you'd like to add there?
Yeah, so in addition to some of the demographic kind of themes that Ed just highlighted, maybe some more macro themes that came out. Leaders of lower middle market companies are steering through a complex landscape, a complex risk landscape. There's global issues, global interconnections they have to contend with. Obviously, new technology creating both opportunities and significant threats. So that's huge. Executives at lower middle market companies are feeling the uncertainty of today's environment. The survey made it clear that they realize supply chain disruptions triggered by a number of things: climate events, economic volatility, geopolitical instability, You hear that every day. Even shocks to secondary suppliers can quickly cascade and jeopardize operations. So no lower middle market companies immune to that. At the same time, leaders view technology as both a competitive necessity and potentially risk and a source of concern. So advancing AI and other technologies hold great promise, but also significant risk.
Absolutely. Absolutely. I want to keep going on what you just said about the challenges and risks, and kind of as we recap 2025, and we start to dive into the trends specifically that we're going to talk about today. Rob, I want to start with you. We're going to kind of transition a little bit and talk specifically about workforce dynamics and talent acquisition. And as we saw from the mid-year MMI wave, we saw a significant decrease from just a little over 10% in the year-end 2024 down to mid 7% by June 2025. But interestingly, we didn't see that there was workforce reductions, according to our data, and optimistically that we started to see the gap, the skills gap in particular, improve. So as you think about this segment and how the 2025 year unfolded, how are these emerging middle market companies responding to this ever-evolving workforce from your perspective at Chubb?
I think you probably have to look at it relative to companies and commerce across the spectrum. So, what we found is that, not what we found, but what the survey found was that lower middle market companies, albeit kind of hiring is slowing down, the workforce is still increasing substantially faster than both small businesses and larger corporations. And this is supported by ADP figures, who's in this space. These companies employ millions of people and are often nimbler in hiring and adapting to market needs than large corporations. So, albeit a lot of economic volatility, a lot of concern around kind of future economic forecasts, but I would argue that there's still stable kind of hiring practices across the lower middle market relative to the overall environment they operate in.
Absolutely. You made a great point. We continue to see the middle market outperform the ADP employment numbers and the S&P 500, as Edward mentioned earlier. Edward, before we move on to that next perspective, any color you'd like to add to this?
I kind of look at to Rob's point, like investment, what we've seen, just what we see across the industry in general, there's a lot of investment going to technology and IT. Right, which I think the ROI on that investment will take some time, right? But in some scenarios, it's taken away from investment into personnel. But I anchor back in the data in the last study we did. When we look at the investment allocations of companies in this segment, like 24% was in IT, but 14 to 15% was in personnel and people, right? So it's still important, right? But I think what was an interesting stat from that study was 20% was in training and development, right? So and I think you've got to think through the shift that's going on as well. Like these companies, they're moving to a more of a digital environment and how they operate, and they need to bring the personnel along the way on that journey with them as well and train them accordingly. So IT investment happening, people investment happening, and then training and development to get the people to leverage the technology in the best way they can to be successful.
That absolutely a great point. And that actually brings me to my next question. There are endless opportunities for innovation in technology and digitization, and also new technologies to begin adopting and considering. For these lower middle market companies that are scaling at these really incredible speeds, what do you see as most critical for those investment tracks, particularly as it relates to technology and digitization? Edward?
Yeah. We're grounded in the fact that they're all about digital and they're investing in digital and they're all into that. But I think that's AI and automation. That's here, right? We're in that environment right now. Modernization. But I think these companies, and I anchor back to one of the last findings was, 43% of the emerging middle market companies do not have a clear digital innovation plan, right? So while they may be investing and wanting the latest technologies and digital tools, there's an opportunity for those partners that operate around the companies in this segment to help these business leaders plan on how best to leverage technology, right, and get the best ROI from the technology investments that they're working through. I think the other thing we need to be mindful of is cybersecurity as well, right? An investment in cybersecurity, making sure that that's all buttoned down. But yeah, I would say intelligence tools, CRM software, and accounting software are probably the top three areas where a lot of that investment is actually going from an IT perspective. But again, I call out that we also need to help these middle market emerging EMM company owners kind of get to the ROI in the technology that's invested, okay? Because they're too busy running their business, basically. So,
absolutely.
Yeah,
he said the magic word, cybersecurity. So I definitely want to take on that.
Yeah, absolutely. It's a major area for us. We've been in the cyber liability market for over 2 decades. And when you talk about technology, I mean, leaders in the middle market space, view this sector technology both as a competitive necessity, as well as a source of concern. So just the simple kind of umbrella of AI, and you hear AI referenced constantly today, holds great promise, but also a lot of risk for operational efficiencies, improving customer experiences, reducing operational costs. And in our survey, just 56% of lower middle market companies reported that they are prepared for potential cyber attacks or risks associated with the greater use of technology. And of those surveyed, less than 44% carry cyber insurance. So to Ed's point, having a plan, like whether it be kind of offsetting or mitigating cyber risks, it's critically important to have a plan before, obviously, the inevitable can happen.
So that's it. That actually brings me to a question on that digital innovation plans. What kind of advice would you guys give to a lower middle market company that might be hearing this terminology for the first time? Like, how do you start that? Do you approach your banker? Do you approach your insurance agent? How do you begin that?
Yeah, I would encourage them to seek out advice and consultation and leverage subject matter expertise. From a risk management perspective, absolutely consult your insurance agent or broker to advise kind of whether it's risk mitigation and controls that you can implement in terms of employee training and employee behavior, whether it be clean desk policies or how to manage sensitive information, or to accessing kind of offsetting risk associated with technology and cyber to third parties and buying insurance to offset that. So absolutely seek advice versus kind of go it alone. But that would be my number one recommendation.
Totally with you. I think the onus is on, Rob, the existing service providers to be that one-stop shop for the emerging middle market company owner, right? And what we see today is service providers to this segment they may provide insurance, financial services, technology, digital solutions. They may provide a wide swath of services to help that company. But I'm totally with you. I think it goes back to the existing service providers who has that expertise.
So I'm hearing, going back to an acronym that we've used off and on, is BAIL or BAIL, banker, accountant, insurance agent, and lawyer as their key advisors in executing any plans and kind of making sure that all of their bases are covered when exploring new digital innovation. Thank you to both of you for those insights. Those are really incredible insights there. want to transition a little bit to another trend that we saw in 2025 and are going to continue to see for several years ahead is business owner transitions and succession planning. Edward, you had mentioned from our emerging middle market report that we did together that we expect that boomers will be all be 65 or older by 2030, with 30% changing ownership. That is such an incredible volume of M&A and succession planning occurring, and just really would love your take on that from Visa's perspective, who's seeing this happen and play out in real time.
Yeah, I think it just goes back to what we just discussed. These are new leaders. Mm-hmm. Right? The newer leaders, if you will, right? They're millennial Gen Z leaders in a lot of scenarios who drive a new way of who kind of bring new thinking into how they want to operate a business, right? And a lot of that is technology and digitally driven, right? So that therein lies a whole set of incremental requirements that all the service providers around that business need to on how they show up. Right, and I think this demographic are looking for less solutions rather than more, and it needs to be digital delivery and be quick and easy to use and simple. Keep it simple, right? I think as I what we achieve and deliver in our commercial solutions services at Visa is just simplicity of use. And I think that's kind of what these owners are looking for into the future as well.
Thank you. As a millennial, I can attest to needing to have streamlined technology. So you're speaking my language right there. Rob, any other insights on that perspective?
No, I'm going to let it stand. I covered it.
Perfect. Shifting gears, once more, one other big trend we saw in 2025 was this consistent discussion on resilience. We've talked about cybersecurity, we've talked about regulatory compliance and supply chain throughout this conversation. But Rob, would really love your perspective on how the top three greatest risks that were indicated in the June wave, supply chain, regulatory compliance, and cybersecurity, kind of played out through the rest of 2025. And what you guys are seeing at Chubb.
Yeah, so this is a big area for us. So have a perspective. So bear with me. Compared to the broader middle market, fewer lower middle market companies are well prepared for a wide range of disruptions. We've kind of alluded to that already. Many are in early stages of building resiliency. Based on the survey, only 6% engage in resilience building services. Only 29% work with a third party on business continuity planning, and just 27% consider contingent business interruption coverage or CBI coverage, right? So those are fairly low numbers there. Preparedness is further challenged by the need to balance risks related to data security, privacy, technology, and other costs. Only 56% of lower middle market companies report being very or extremely prepared for cyber attacks. And like I said before, less than half carry, only 44% less than half carry cyber insurance. So as companies increasingly turn to artificial intelligence, they anticipate several key benefits, including improved operational efficiencies, like I said, but at the same time incur greater risk. Despite all this, right, greater preparedness is still within reach for this sector of the economy. Lower middle market companies have a key advantage, and I referenced it earlier, it's agility, right? More than half, 58% actually, of leaders in this segment say they are very or extremely reliant on brokers to help manage risks, relationships that can unlock robust resources. So it's good to hear that more than half of the leaders in this space are consulting their subject matter experts, but there's more to do there. So maybe some suggestions to advance their resilience. 3 actions stand out. So one is invest in business continuity planning. To Ed's point earlier, plan ahead. A comprehensive business continuity plan prepares organizations for disruptions such as cyber attacks, natural disasters, supply failures. This process involves mapping out mission-critical processes, identifying potential vulnerabilities, and developing recovery strategies in advance of anything actually happening. So being prepared and having a plan. It should be collaborative, enterprise-wide, with insurance carriers playing a key role in uncovering blind spots or strengthening preparedness. The second is assess business interruption insurance. So you manage it and then you can offset it. So companies should work closely with their brokers to evaluate their coverage for potential disruptions. Standard business interruption coverage is typically included in commercial property policies. More complex risks may require adjusted limits or additional options like CBI insurance for comprehensive protection. And lastly, kind of alluded to this several times, but elevate your cyber readiness. Every company is interconnected. Like there is a cyber exposure regardless of what industry sector you're in. So as a business becomes increasingly digital, cyber resilience is essential. Cyber insurance not only protects a company's reputation and finances, but also provides access to critical services such as vulnerability assessments, defense enhancements, and incident response. So the insurance product can help both pre-breach as well as post-breach, or pre-attack, post-attack. So while the challenges facing lower middle market companies can seem daunting, and they do to me just by talking through them, they are surmountable. So by partnering with brokers and insurers and attorneys and accountants and bankers, I may have gotten the acronym wrong there, leaders can gain clarity, access tailored solutions, and significantly reduce kind of the impact of disruptions, again, enhancing their readiness.
Thank you. That was
that was a mouthful.
Wow, that was, yeah. I mean, it was great. It was great. It was very thorough, and I appreciated. You kind of started to transition into the next section, which you guys could have just done this without me. I don't think I needed to be in here. But we look ahead to 2026. I know one thing that you talked about, Rob, was needing to elevate your cyber readiness, needing to be ready for business continuity planning, resilience building. These are, as an ever global world, as companies become more and more global, and digitization and technology become more and more prevalent in small business and lower middle market. Needing to continue to build that resilience is really key, along with those digital innovation plans that we talked about earlier. Edward, since we kind of heard a little bit of recommendations and predictions for 26 from Rob, would love to hear from you what you might see happen and play out in 26.
Okay, so let me give an economic view first, and we at Visa, we produce a GDP growth metric, and we had some view back in this week actually on how quarter four GDP growth was slightly stronger than we first thought, right? We also think as long as aggregate income growth maintains momentum, consumer spending and economic growth should continue to expand as we go into 2026. And we expect the positive economic growth will continue in the first quarter with rebound in government spending, and then there's going to be tax refunds as well. So after, the expectation is that the GDP growth rate is expanded to 3.4% year over year this year, which is a revision upwards. So just take that as what it is. Our metrics tend to be pretty solid and pretty bang on. So there's I know we hear a lot of noise around unemployment and all the rest, but yet our employment growth, but yet core indicators are good. I also say this in the context of, there's the continuing uncertainty around tariffs and what that's going to mean, right? I think that has settled down somewhat, but yet uncertainty is also playing on the minds of these emerging middle market owners. And they, a year ago, they may have invested $1, maybe a year and a half ago, that they may not invest today. So that's a factor that we need to be mindful of. We also need to think about supply chain disruption. I think Rob talked about it briefly as well at some point. We track that very closely on where these companies are buying from as a kind of a direct result of the tariffs. But there's some movement in supply chain, which has an impact. And, but I go back to as I kind of meet our financial partners around North America, everyone's engaged in bringing strategies together on embedded payments and digital payments, right? Embedding payments and financial services into the day-to-day operations of small, middle market, large market companies. So anyway, I guess that was a lot, but core themes. growth is going to continue to improve, right? There is still some noise in the ecosystem as it relates to the impact of tariffs, supply chain, but yet we see resilience and we see companies being focused on growth in the future.
Fantastic. Thank you. What a great projection for 2026. Rob, any other touches you want to add to that?
Yeah, maybe just a finer point from my perspective, maybe less economic than what Ed just shared, but like rising costs, like inflation is still at our back, trade policy, economic uncertainty. We talked about the talent pressures that these companies are facing. So it influences both current day decisions as well as long-term outlooks and investments that lower middle market companies will have to make. This is going to be impacting companies on a long-term basis. So the other piece is, it's an ever-evolving risk landscape. It's a volatile operating environment that we all are in. So we at Chubb are constantly looking to both monitor the environment and support our clients, both to ensure resilience as well as to kind of make sure our products, our insurance products, and our claims response stays in line with our clients' needs.
Sounds great. Thank you so much. That's absolutely true. We're all of these are key metrics and macroeconomic conditions that we're going to continue to study and assess through our year-end 2025, and then of course our mid-year 26 waves that will continue for the middle market indicator. One final question that we here at the National Center for the Middle Market always ask our podcast guests is, what is one piece of advice that you would have for business owners, investors, or partners to these lower middle market firms? What piece of advice would you give to them? And we'll go ahead and start with Rob on this one.
Very simple, straightforward, pretty much stay nimble and agile. Like, you have to be adaptable to what I just talked about, the ever-changing kind of market and the risk environment you operate in. So the more nimble and agile you can be becomes a differentiator relative to your peers in the industry you operate in. The other piece, kind of related and not to be redundant, but have periodic conversations, engage your insurance agent or broker to find solutions that address your coverage risks, and make sure you're supported both for right now as well as for what the future may hold. So nothing scientific there, but pretty practical advice.
Thank you.
Yeah, I will say just leverage your network, right? And and then whether that is, the user group that you're part of for the financial system that you might be implementing, or whether that's, to Rob's point, whether that's your insurance broker, or whether that's your financial service, your bank, or your bill, your bank, your attorneys, your whatever, the lawyers, leverage them. So leverage the network.
Well, thank you both. Yeah, being agile and being open to these conversations with your key advisors are so key for the sector of the economy, as they're moving fast and they're oftentimes working in their business instead of on it. So, Edward, Rob, thank you for a thoughtful and engaging conversation and for the work you're doing to support the emerging middle market. Grateful to have the both of you and Chubb and Visa as partners in this work. For more resources, visit the National Center for the Middle Market at middlemarketcenter.org. You'll find research, case studies, and prior podcast episodes there. And to explore more content, check out Chubb's Middle Market Insights or Visa's Emerging Middle Market Report by visiting the links in the show notes. Thanks for listening to The Market That Moves America. We'll talk to you soon.
Thank you for listening to The Market That Moves America. Never miss a new episode by subscribing anywhere podcasts can be found. You can also subscribe to our email newsletter at middlemarketcenter.org.